Hi everyone, my name is Amy Rose. I'm the Managing Director at Digital Economy Council of Australia. We're about to start our, I think, sixth session of the Global Regulatory Digital Asset Summit taking place from Australia, looking at the various jurisdictions and how different countries are regulating digital assets, or perhaps even not yet. So our session today is we have Ron Tucker, who is going to be our moderator, and a little bit about Ron Tucker. And I'll take you back just quickly on the history of the Digital Economy Council of Australia. Ron was one of the founders of the Australian Digital Currency Association back in 2013. And then there was a merger in about 2019 between ADCA and Blockchain Australia. And we have since, over the past few months, rebranded and renamed to the Australian Digital Council of Australia, or DICA. So I'm going to bring the panelists to the stage. We have Ron Tucker, Angela Ang, Chengyi Ong, and Sean Lee. And we're going to be talking about Singapore and Hong Kong before, and just a little bit about the sessions coming up after. We'll have a look at Japan, Philippines, Indonesia, and Vietnam. So let's get the party started. For Singapore and Hong Kong, I'm going to bring them all to the stage now. Got the stage, Ron. Thank you.
Well, thank you. Good morning, everyone. Very pleased to be here with you all this morning. I'm Ron Tucker. I am the founder of the Digital Economy Council of Australia. I am also the co-convener of the V20 Summit, which was a series of summits that brought together the 20 largest crypto exchanges in the world to meet with global regulators, such as the Financial Action Task Force, IOSCO, Financial Stability Board, on the sidelines of the G20 Leaders Summit. It's essentially a triannual event. Also co-founder of the International Digital Asset Exchange Association, which has been a Singapore, Australian-led initiative, but now counts over 14 different jurisdictions and their respective trade associations to the table to collaborate and work together to be able to resolve and address a lot of the issues we face as an industry. Today, I'm very fortunate to be joined by three policy and regulatory experts, primarily out of Singapore and Hong Kong, on our panel today. First, we're going to hear from Angela Ang, who is the head of APAC policy for TRM Labs. Then we'll speak with Sean Lee, who is the former CEO of the Algorand Foundation and is presently with the Crypto Council for Innovation, counterpart association to organizations like DECA and IDAXA. Chengyi Ong is also the head of policy for APAC with Chainalysis. I've had the chance to speak with each of them over the last couple of weeks, had very, very enriching, refreshing conversations with all of them, and I think we're all very lucky to hear from them today and have them with us. So let's jump into it. Angela, let's start with just broad regulatory trends you're seeing in Asia at the moment, and then we'll narrow in a little bit further into Hong Kong and Singapore.
Thanks, Ron, and great to be here. Maybe I'll just kick it off with a small introduction. So I do represent TRM Labs. We are a blockchain intelligence company headquartered in the United States, and we basically help our customers in the public sector, law enforcement, as well as financial institutions, crypto businesses to fight fraud and financial crime on chain. And before this, I was with the Monetary Authority of Singapore for over 13 years. Most recently, I was in charge of the licensing of payments and crypto service providers in Singapore. So that's kind of my background based in Singapore, and very happy to be on the panel with a great slate of experts today. So just kind of taking a tour of Asia to kick us off, Ron. Maybe I think the one kind of buzzword that I would use to describe the trend when it comes to crypto regulation in Asia is really clarity. I think clarity. And this has kind of like been building up for the last couple of years. We've seen a lot of rulemaking kind of happening in key Asian jurisdictions, of course, in Singapore and Hong Kong over the past few years. And I think this year was the year that we really started to see an acceleration in implementation. And I think, you know, when we always say devil's in the details. So I think when you go into implementation, that's when you start to get real clarity. And we're definitely getting into the details this year in 2024. I mean, when we talk about Singapore, the licensing regime for custody service providers that was passed actually in 2021, it went live this year. The grace period for those that are currently operating to apply for licenses ending in October. There have been close to 50 that are filing for an exemption already. So we'll kind of get more clarity around, you know, who's going to have a custody license in Singapore, what the expectations are, consumer protection requirements, customer asset segregation that has kicked in. And interestingly, MAS has also revised the licensing guidelines, which actually are quite close to my heart because I kind of wrote the first draft of my team in those initial years, and kind of shored up their expectations around the engagement in the licensing process. You know, now they're going to be requiring legal opinions and external audit to kind of look at the business model as well as the policy processes and procedures. And I think that will hopefully provide a level of greater consistency in terms of that regulatory engagement. There's going to be enhanced technology risk requirements coming up, implementation of Financial Services Act. So a lot of implementation, and it's the same in Hong Kong, right? The grace period for the virtual asset trading platform licensing regime kicked off. It ended. And from there, in that kind of lead up, we saw a number of, you know, applicants actually withdrawing their applications. And there's going to be on-site inspection for those that are still in the process. So we're going to get a lot more clarity. We're getting a lot more clarity in terms of what the regulators expect to see if you want to be licensed. Stablecoin regulatory framework, that also went live in Hong Kong. OTC services regulation also on the cards. So I think we're really kind of moving past the initial stage of rulemaking, even in Korea. And there's kind of a lot of momentum. And one thing that we kind of observe across all these jurisdictions is kind of like a willingness, I think, to engage with the industry. And I think the regulatory implementation has really benefited from that strong feedback loop in places like Singapore and Hong Kong. I'm sure Sean and Chengyi will agree, where we see the regulators really engaging in dialogue with players to really understand how, you know, implementation will look. And, you know, where there is kind of like high regulatory friction, that is a very kind of conscious decision that's been taken after speaking with the industry. And, you know, when it comes to Australia, I think it's still early days yet. But I also do see good willingness from key government players, even as the digital asset regulatory framework remains a matter before the government. I do see kind of good willingness from players like Treasury, Austrac, ASIC to engage with the industry. And I think that's also a very positive trajectory. Again, you know, regulators and industry will not always agree, but I think that willingness to have conversations is very important in that implementation stage that we're in now.
Absolutely. I couldn't agree more with you. It sounds, look, a common theme I've heard over the last 12 months is maturity in terms of the industry. But it sounds like we're seeing an evolution on both sides of the fence between the regulatory and policymakers as well as the industry. So it's very encouraging to see and hear about what's happening in Singapore, Hong Kong, Korea. Japan, of course, has been a leader for the last 10 years in this space, always ones to watch, take some notes from. Sean, moving on. Former CEO of the Algorand Foundation, Crypto Council for Innovation. Tell us just quickly, 90 seconds, what is your come to crypto story? And then I'd like to hear a little bit about what's happening specifically in Hong Kong.
My come to crypto story is nothing fancy as many that would you know, allude to, which is, you know, I bought Bitcoin in 2012 and I use it to spend it on pizza or something like that. Nothing fancy like that. It was a job opportunity. I've always been in the infrastructure and open source technology space. And when the Algorand blockchain went to mainnet live, and we're setting up the foundation in actually Singapore, because again, some of the regulatory clarity that has been brought up over the years, I became the CEO of the foundation and essentially built up the community and ecosystem partnership from that point on. So it's really an opportunity and a little bit of an evolution in terms of infrastructure. If you look at kind of the data centers, the clouds, the blockchain infrastructure, and now we have financial infrastructure that are very digital assets based. And I think it's just part of how the industry is evolving as a whole. I will probably, I'm sure all of us here are agreeing with Angela's point of view in terms of where Asia are. I'm actually in Tokyo right now, and I've actually got a meeting set up later on with the Bank of Japan. So and that goes to show that there's a lot more willingness for the regulator to actually open doors for both domestic players as well as foreign players to come and talk to them and learn from them, right? And specifically in Hong Kong, over the last 2.5 years, both the Hong Kong Securities and Futures Commission as well as the Hong Kong Monetary Authority, the two main regulators in Hong Kong, have been really progressive in pushing out both consultation exercises as well as finalization of the regime. So I think from that perspective, it's been giving a lot of very positive signals towards the industry at large that the Hong Kong government is serious about this. And the really interesting thing that I keep continuing to hear is that what if Beijing comes around one day and say, no more crypto in Hong Kong, right? The reality is, if you look at how policies are actually managed and enacted in Hong Kong, especially something as important as digital assets regulation that sits right on top of the financial center, designation that Hong Kong has, a lot of these are indeed part of China's overall strategy. China does not allow for crypto trading and mining onshore inside of China, but they're actually pushing a lot of the crypto-related policy work as well as the development actually in Hong Kong. And that provided a lot of support for both the regulators in Hong Kong to really push forth, both in terms of the virtual asset service provider and the VATP regime that Angela talked about before, and then also the soon-to-be enacted stablecoin regime, hopefully by the end of this year. Now, these two things probably form as the two core bases of any crypto regulation, right? You need to have clarity around how you're going to trade these assets from the perspective of AML, KYC, travel rules, and everything around those. But at the same time, you also need to have a proper compliant on-ramp and off-ramp into buying these crypto assets. And that's where the stablecoin regime actually becomes very important. So I think from an overall perspective, both of the regulators have been engaging individually with players, but at the same time engaging with industry associations like the Crypto Council that are foreign, but at the same time, some of the local industry associations like the Web3 Harbor and a few others as well. So very progressive in that sense. Now, however, I would probably say one thing as well, and hopefully actually it's open, it's public. It's a journey, right? It's a work in progress. I would venture to say no jurisdiction in the world is all there yet. I would say probably Singapore is very far ahead. Japan here is very far ahead. Hong Kong still have a few missing gaps that the authorities are still working on. Namely, what do you do with OTC? And OTC ranges everything from your Bitcoin ATM machines, which I'm still curious why anyone would ever use those things, to professional OTC desks that are trading very large blocks, right? And the notion of OTC in the digital asset space, especially as it relates to crypto assets and stablecoin, is one major topic that Hong Kong is looking into right now. And that is not in place at the moment. We have attended a number of these consultation roundtables, and we do believe that the authorities are starting to really look into that area. The other area that still needs to be sorted out, and I think we can probably take a page out of Singapore, is this notion of third-party custodian, right? So how do you enable for third-party custodian that are licensed, that have the rigor and the security measures in protecting user assets, but not lump everything under either a VATP regime, which exists today, or depend or delegate that towards the banks? Because many of the banks are not really ready to do digital asset custody either, right? And at least at this point. So it's a work in progress, but it would be phenomenal, at least from the industry perspective in Hong Kong, for the authorities to bring additional clarity around how digital asset custody should be managed and governed, and provide some additional guideline in that regard. I'll probably
Mm.
stop there for now. But I'd say Hong Kong has been making a lot of inroad, but there's still work to be done.
Excellent. Thank you so much. So an emerging theme is certainly clarity, detail, but very much a work in progress, as has been our industry for 15 years on now. Chengyi, I'm delighted to speak with you. We had such a great conversation the other day. Look, why don't you tell us a little bit about the stablecoin regime comparison cross jurisdiction, and then what Chainalysis is seeing. But before that, just 90 seconds, tell us your come to crypto story and what you do with Chainalysis.
Absolutely. I can cover the come to crypto story quicker than that, I think. No, but like what I do at Chainalysis is I cover APAC public policy within Chainalysis, which is a blockchain analytics company. What we do there is we spend a lot of our time working with central banks and regulators trying to help collectively build an understanding of what's happening in the crypto space, drawing on our on-chain data, and then trying to examine how, this data can be used to plug various data gaps that we're seeing in this area. In traditional finance, we've got built up over the decades extremely elaborate reporting frameworks, data collection mechanisms. We don't have that in crypto, and I think that's what's fascinating now. Like, how can we harness public blockchain data to meet those needs? Why am I my come to Chainalysis story is really about being interested in that big question and then taking the leap to try to answer those from the side of the data provider rather than the data user. So that's where I am. And then before I move on to the stablecoin regime comparison, I just wanted to pick up on a couple of things that Angela and Sean mentioned. Like the first thing that came to mind as I heard Sean talking about the Hong Kong regime and how there are gaps and they're looking to other jurisdictions, is that honestly every market that I go to, the players in that market are always saying, oh well, things are not super satisfactory here. Things are, progressing a little bit more quickly in such and such a jurisdiction. I wouldn't say it's grass, is greener, but obviously wherever you are, you're always acutely aware of what could be better. It's never perfect anywhere. Regulation and supervision is a journey. And when I think about like globally where we are, we really started from a place where crypto regulation was focused solely on sort of financial integrity risks, right? And over time, we've seen that broaden, so that we started to scope in consumer protection. We're starting to look at things like market integrity, and it's always going to be an uncomfortable process, whatever jurisdiction it's happening in. And I think Angela and Sean are both absolutely correct that dialogue, that two-way dialogue, is critical in forging a path forward. Then I wanted to talk about stablecoins, because stablecoins is one of I think collectively all our favorite topics these days. In Chainalysis, we pay a lot of attention to stablecoins because we look at on-chain flows, and we look at the distribution of those flows, not just across different entities, but also across different assets. And what's become incredibly clear over the last couple of years is that stablecoins have become that backbone of the crypto ecosystem. So if you think about stablecoin market cap, we're looking at something at like 10% or less of total crypto market cap. But we are seeing stablecoin on-chain flows comprising 50% or north of 50% of the total. So in 2023, out of a total of about 12 trillion in value moved on chain, 60% of that was stablecoins. So I think that speaks to the fungibility, the flexibility of stablecoins as an instrument, the potential for wide-scale adoption. And I think that is what has brought and caught the attention of both central banks and regulators. So this is the closest nexus in a way between crypto and fiat. It in a way offers the most potential utility in solving the real world financial market infrastructure problems that we see today. costly cross-border payments, inefficient settlement. But at the same time, it's scary because it is an instrument that can get widespread adoption. So, any financial integrity risks it covers will also equally get propagated. Financial stability risks are also prominent. I think in Singapore and Hong Kong, we've seen not first movers, but relatively early movers in trying to launch stablecoin regulatory frameworks that are very much targeted at both harnessing the benefits and mitigating the potential risks that could be associated with stablecoins. There's a lot of similarities in the frameworks between Hong Kong and Singapore, a lot of focus on things like the stabilization mechanism, composition of reserves, disclosure and audit. There are some differences between the Hong Kong and Singapore regime, primarily, like most of these are small detail differences, but I think primarily in the treatment of unregulated stablecoins. In Hong Kong, they would not be permitted to be offered to the public. It's my understanding in Singapore, they would be sort of treated in general like other crypto assets. So still available for sale, but with a little bit more friction. I'm going to pause there because there is a lot more to say here. But I know that Sean also is very active in this space, given all his different other activities, and I wanted to let him chime in on this as well.
Absolutely. Sean, look, in order to weave this great tapestry together in what is one of the most innovative experiments, I think, of the last century, it's going to take collaboration, cooperation, communication. We need to get all of the stakeholders to the table and really working on it in a meaningful way. Chengyi, I think you said on our initial call, there is a little bit of a need to, lock ourselves together in a room with the technologists, with the policymakers and regulators, and sort of throw away the key until we work a lot out. Sean, you are spearheading an initiative with the Crypto Council for Global Cooperation. Can you talk to us about what you're doing and how you see bringing us all together in that way that can really resolve and make a difference and make the steps necessary to ensure that we meet the goals that we have in front of us?
Certainly, I'm happy to. I'll give a kind of short synopsis of what that is. So the Crypto Council for Innovation was set up by a number of global industry leaders in the crypto space for the very specific purpose of creating healthy, responsible dialogue with regulators. Now, the council is headquartered in Washington, D.C., but we have regular conversations, obviously, with not only in North America, but also in the EU, in the Middle East, and here in Asia as well. Now, part of what we do are really on two fronts, right? One is advocacy. So in the topics of stablecoin, for example, how do you treat things that are more fiat related or fiat reference, as what we call them in Hong Kong, or single currency stablecoin in Singapore? But at the same time, what about things like algorithmic stablecoins or things that are more crypto assets backed? Right now, most jurisdictions in the world, actually all jurisdictions in the world right now, are focused on fiat referenced. But at the end of the day, at some point, these more innovative variances of stablecoins are going to pop up in the market. So how do you possibly regulate those when it looks and smells very, very differently than traditional financial instruments? So at the council, we very often have these conversations with regulators, both from an education perspective, but at the same time to facilitate workshops with them, right? Until you try, you don't actually know how these things work, right? Earlier this year, we actually ran a number of kind of regulator boot camps and even allowed them to kind of just play around with crypto wallets and transferring assets in the form of stablecoin from one to another. Like it's exercises like that allows both the community to better explain these technology and new innovation, but at the same time for the regulator to see, this is actually where it's going. And maybe we can't push all the way yet, but where's the middle ground and what are the test beds or sandboxes environments that can allow the industry player and the institutions to actually play. So I think that's really where a lot of the collaborations are. And at the Crypto Council, we're very fortunate to have open doors with many of the global regulators and thereby allowing us to have that opportunity to really contrasting and compare, but also advise where things are, because there's so much that are happening in different jurisdictions that are really fascinating. I mean, obviously today we're primarily focusing in Hong Kong and Singapore, but if you look at places like Dubai, Abu Dhabi, they have some very progressive framework that sometimes you would think, wow, how did they get to that point so fast, right? So these are things that I think the global regulators are indeed monitoring, across, and they're talking to their counterparts in different jurisdictions. And that's one of the reasons why things have been moving so much quicker over the last 2 years. And I'll probably say that's more so here in the kind of eastern part of the world, right? In the Asia Pacific region, I think the US still needs to sort itself out at some point. Maybe the election will change things from one regard to another. We'll see. But I think the policy side and what organizations like the Crypto Council are really trying to drive is really towards that.
Excellent. Good timing, Sean. So we're down to the last 60 seconds. So I just want to give a chance for some parting words of wisdom. Sean, why don't you leave us with a few words? What do we need to think of next?
I will leave it one thing, a little bit of a promotion for Singapore and Hong Kong. There are lots of phenomenal Web3 and digital asset-based conferences that are coming up in the second half of this year, as well as leading into next year. So if you want to know what we're actually doing in this jurisdiction, come and visit us, right? Seeing is believing.
Absolutely. Chengyi?
That's really good. There's also a lot of like cool policy people based here. So, in case you want to drop by and have coffee. I would say, thinking about the characteristic of the market in both Singapore and Hong Kong, both are dominated by a lot of like very international players that are operating around the world, really. So cross-border supervisory collaboration, I would say, is probably the next phase of work that we need to be thinking about.
Excellent. Angela, last word.
Yeah, come and visit us. A couple of opportunities lined up ahead. Token 2049 in Singapore, Singapore FinTech Festival, Hong Kong FinTech Week. These are kind of like the key milestones in Singapore, where you kind of get to see the gathering of the ecosystem, the international ecosystem in Singapore and Hong Kong. So come visit us, and if you want to talk through the finer points of, I don't know, the MAS licensing guidelines, hit me up for a coffee.